Hi, this is Drew Tignanelli. This is our November update, and markets are continuing to hold up.
Yeah.
A lot of people are worried about the election, but we keep saying nothing to really worry about the election. The market's already made predictions as to who's going to win, and we have a webinar coming up in November. I think it's
20th.
November 20th. It's called Now We Know the Results of the Election. What do you do now? There's going to be, no matter who wins, there's going to be things that you're going to have to think about and be ready to do based on what types of changes might happen, what types of political, programs or taxes, et cetera, might be implemented.
Who's favored, who's not favored in the markets?
Sectors what
and
industries, what sectors, could be hurt in that type of situation. So, as we keep saying, elections, politicians aren't the moving force of the market as a whole. They can affect the stock, they can affect an industry if they're positive or negative to it, but they don't affect markets as a whole. But the Federal Reserve will affect, and all this crazy media drives me absolutely crazy when they talk about, well, if this one wins, the market's going to do this, and and the market is favoring this political party,
right.
And that's a bunch of garbage. Markets favor the Federal Reserve, and if the Federal Reserve is accommodative, and like they are, and they're promising to be for another 2 years or so. I mean, look at 2018. Okay. Trump came in, he did all kinds of positive economic things, such as cutting interest rates and tax rates and deregulating and all these things that are considered positive for companies. But when the Federal Reserve started to tighten in 2018, he didn't stop.
Right.
He just,
none of it mattered. All it mattered was the Federal
pounded
Reserve.
them, and when he did, the market was down 25% in a matter of a month and a half when the squeeze by the Federal Reserve got too tight.
Right. Yeah, I think if we were to go to the video we did a few months back, we shared some of the statistics on what is the real average of what happens after one party or another party wins an election, and it supports the same thing, which is that they're on large, there's not that big of an impact from it. But that being said, there is other things to be thinking about this time of year.
Right. Again, company benefits, time of year, and just your whole insurance going into 2021. Risk management is an area that a lot of people waste money on because they're not, they think that what they're doing has some great benefit. They've heard somebody said something to them or whatever.
Well, the most powerful messages in the world are greed and fear. And insurance is almost exclusively sold with greed and fear in many instances.
Well, fear.
Well,
I don't know what greed you get out of insurance.
Well, I guess, what if I lose one leg but not the other in an arm in combination, and then I get this $20,000 payout from my this weird policy. But the point is, a lot of you are going to be going into your open enrollment this month in the coming weeks after you see this video, and it's a great time to talk about what insurance you might need and what insurance you probably don't need. And I say probably and might because every instance and every person's situation is different. But in large, there's a number of things we can say. Something that you and I and the other advisors were all talking about the other day is we've had an increasing number of clients come to us worried about title theft.
Title theft, yeah, that's a big topic, and there are people that are playing on that fear of title theft. And the concept is basically an identity thief goes into the real estate of your county and says, I'm Drew Tignanelli, and
fake IDs,
fake documents
signed,
and I'm selling this property over to this guy here, and it's settled, so you got to move the title over to me, or something like that. And it has happened. I mean, to be honest,
sure.
It has happened.
There's an FBI report on it.
It's not like the most broadest thing you've ever seen, but it has happened. But usually it happened because people were not paying attention, And usually it happened because you didn't freeze your credit report.
And you had your personal information on social media. Your information was available to them.
But in the house was empty. That's another big one.
So, but in the end, it's basically just identity theft. And the thing is, fraudulent conveyance is not legal conveyance.
Right.
If someone fraudulently changes your title, and then you can go to the sheriff's office and say, "Hey, look, this wasn't this was fraud." Your title's going to be changed back to the way it was. It's still going to be a headache and things like that.
But the chances, if you freeze your credit report and you monitor your mail and you're diligent at what you do, the chances are very slim that anybody would ever be able to get
Make
through
sure you're
something
getting the
like
water bill. Go on the SDAT website. It's easy.
Yeah.
See who owns your house on the SDAT website. State Department of Assessments and Taxation.
Back to company benefits, though. If you hear the word AFLAC, that acronym, AFLAC, you're probably in a bad area.
FAL don't always give good insurance advice.
AFLAC is sold strictly, I guess you could call that the greed syndrome or the fear syndrome.
Right.
That you pay us a little bit of money, and if you get cancer, we're going to give you a monthly check. Think about the craziness of the concept of hospital insurance. How long does somebody stay in a hospital nowadays?
2-3 days.
2-3 days. I mean, even if they need to stay longer, they're 2-3 days. And you got hospital insurance? I mean, come on.
Well, and the point is that all insurance is, the risk, the cost, and and the premium. And the thing is, you got to look at some of these insurance and say, is it worth me putting money towards this slim chance? The other thing that most of these policies, especially the ones about accidental death and dismemberment, cancer, various types of illnesses, they all have so many loopholes in them that they make it really pretty narrow as to who's going to be able to actually make a claim on this.
Right.
Not to mention it's already a coverage that you have a very low chance of making a claim on.
Yeah. So, the keys are that you have medical insurance. You don't want to worry about whether it's cancer or whatever, your hospital. It's just you want medical insurance. You want disability insurance. It doesn't matter how I'm disabled. I just want disability. If I die prematurely, I want life insurance. I don't care if I die in an accident or not.
And let's take an extra second on the disability insurance. The things that you need to protect are the things that would hurt you the most if you lost. So for many people that aren't already in retirement or close to retirement, what would be the worst thing that you could lose? Your ability to make an income. So disability insurance is the protection that if you're not able to make your income, there's some aspect of insurance to help you make that up. And that's a big thing for younger people.
Right, and a younger person, they don't have a lot to lose, so do they need a lot of liability protection? Who's going to sue you if you have nothing to claim? But when you're older and you're retired and you've got a $2 million nest egg to retire on, you better have liability insurance, umbrella liability, to make sure no one can take...
People tend to slip at bigger houses.
Yeah, they understand that if you have money, they may come after you if you don't have a lot of insurance.
And what is that insurance that you're saying that people should have in that case?
Umbrella liability insurance. That's the, all of our clients hopefully know that we want them to have umbrella liability if they have assets, if they have some net worth. $500,000, $1 million, net worth. I want that umbrella policy there.
Plays right into the idea of protect the things that would hurt the worst if you lost them.
Yeah, if you've got a lot of cash and you're fairly liquid, do you need to be insuring a car that's worth $6,000 for collision and comprehensive? I don't think so.
Do you need a $100 deductible if you've got $100,000 in the bank?
And we see that all the time. People don't line their deductibles up with the amount of liquidity they have. So risk management, this is what that's all about. And too often people are sold insurances based on greed and fear as opposed to proper risk management. So anyway.
Let's talk about an item that is not an insurance piece, but it is a tool to insure you for certain situations, a tool that you got to use just recently.
Yeah, I just wanted to, we talk about it all the time. We want all of our clients that have a house with equity in it to get a home equity credit line that I don't want you to use, I just want you to get approved for. Why do I want that? Well, let me use my example. My wife and I put our house up for sale. We have a fair amount of equity in it, and when we put it up for sale, we're buying a small condo here in Maryland, and I bought the condo before I sold the house. I wrote a home equity check on a credit line check for the condo. I bought the condo, put the house up for sale. The house is sold now. I'll get that money in about a month, and I'll pay the home equity credit line off totally. But if I didn't ask for that home equity credit line 2, 3, 4 years ago, they would have either not given it to me, or they would have given it to me at an outrageous cost.
Right. You would have paid at least $2,000 or $3,000.
It didn't cost me a nickel to get it. It didn't cost me a nickel to keep it. And it only cost me when I used it, and I only used it for an emergency or a planning strategy. I didn't use it to buy kitchens and decks and new cars and things like that. I only used it when it was a solid planning strategy. Like,
right.
A client loses their job. You're going to go to a bank and say, I need to take a home equity credit line out now that I don't have a job.
Right.
That's just the wrong time to ask them. That's the
wrong no on that.
It doesn't cost you anything to get it. The best time to ask a bank for a loan is when you don't need it. And that's not humorous. It's the truth. Believe me on that.
Now, there's exceptions to everything. And the one little exception that I want to put out there is if you're hearing this and you're thinking that next year you're going to put that home up for sale, that may be one consideration of not to. Most banks are going to require that you keep the line of credit open for 2 years. There is one bank in the area that doesn't, but most of the banks are going to require you to keep it open for 2 years. So you should be doing this when you anticipate that you'll be in the same home for at least 2 years.
And you also have to be prudent as to how you use debt.
Right.
If we see a client that's not being prudent on how they use debt, we may not recommend the strategy. So anyway, for most people, it's a great planning tool.
Absolutely.
I think we're out of time, Mikey.
I agree.
Anyway, this is Drew Tignanelli saying God bless.